So happy New Year, folks. Welcome to a fresh year of trading. I hope that the market has been treating everyone good the last 2 days. What's going on? Today, or rather this week is what? We're going to see the first Friday of the month of the year. So what's that? We are going to have NFP releases on Friday. That to us, that's the main issue for the week. What else is going on? We earlier saw a release. We earlier saw the bond auction of Portugal. And what happened? So Portugal issued a 6-month treasury bill. The yield rate was almost twice that of the previous one at 3.6%. Bid cover ratio was good, 2.6 versus 2.4 before. But as a knee-jerk response, we had the euro selling off. Why such a negative reaction to this? If you talk about government debt, among the safest of the government debts are the treasury bills. These are short dated. They're going to be out there only for 6 months, but even though they're going to be out there for 6 months, it seems that there are still concerns that we may actually have a potential default in the future. That concern is translated into the higher yield that the market asked for this treasury bill. Now, so what's the implication? If Portugal has to pay 3.686% for a 6-month treasury, how much more would they need to pay once they need to issue about 20 billion euros in bonds around April? So the concern here is private money is still hesitant about buying up the debt of the periphery. If that is the case, then it tells us, or it once again focuses us on the Portuguese bond auction. And you're saying that if a treasury bill that was short dated, that if that 6-month treasury bill needed to have a high yield, how much more is the market going to ask once Portugal refinances, once Portugal borrows 20 billion from the market? Remember, they only borrowed 500 million this time. So the implication here is, once again, Eurozone debt is becoming a hot topic for the market. And if private investors continue to ask for higher yields, for higher interest rates, then there is the likelihood that at some point your periphery governments will just say, no, we can't afford this. This is too high a rate. This is not sustainable, and we would rather borrow. Okay, I'm really getting this object error from somewhere. That we would rather borrow from the ECB, tap our emergency funding facilities. So if that happens, the implication for us in the FX market is you're going to once again have doubts over on whether the euro will survive as it is. You're going to have doubts over if it's got a good idea to be holding on to the single currency. So that said, I think we should focus, or we should focus on looking at our euro charts from here. Now, as we mentioned earlier, we are also expecting that for the week, our key issue will be Friday's NFP releases. So because of this, what are we thinking? We are thinking we are expecting a good NFP on Friday. If that good NFP on Friday turns out even better than the 136,000 consensus, then it would be an argument for us finding a stronger euro. As far as today's trade is concerned, I'm not really thinking about taking any further action. If we take a look at our charts, we have seen a decent sell-off for the day already. We have seen a 113 pips of price action. The average daily range for the euro is only 120 pips. So, given that we are near our supports at 61.8 fib, 32.19, given that we have seen close to the average daily ranges already, I now have doubts over whether it still makes sense for us to take action, whether a further sell-off would be possible. Okay, so let's just examine the charts for the moment. So, from a big picture, we are stuck in a congestion from the 30.73 area towards the 34.30 threshold. Our rejection has already given us a 61.8 fib retracement, 30 to 19. As we said, the average daily ranges has nearly been hit. We find ourselves well supported at that 61.8 fib area. I think the focus for us from here would be trying to get some form of technical rebound. Now, what could be a reason for a technical rebound? From the Fundi picture, the only releases that will be coming out going forward is from the US. You've got a lot of jobs numbers coming out today. You have your ADP, non-farm employment. Looks like the private sector is expected to generate another 100,000 jobs. So, how are we going to view this? Well, if we get this number coming out as expected, it actually has a bullish implication for the dollar. If the numbers fall short of consensus forecast, then you're going to face the possibility of a further sell-off in the stock market. If there's a further sell-off in European equity markets, then that would again be an excuse for a stronger dollar. So at this point, it seems that from the Fundi picture, what we are getting is a win-win scenario for the greenback. If those jobs numbers are good, it will be an argument for a strong U.S. economy. Remember, yesterday's factory orders gave us a rally for the greenback, and now we're talking about the jobs data. If the numbers are bad, we will be talking about having a sell-off in the stock market. If there's a sell-off in the stock market, then we risk further risk aversion. We risk getting a stronger yen and a stronger dollar. So, while we have seen average daily ranges, while we tend to think of us to be well supported at 30 to 19, it looks to me like my preference would be to actually see if there are technical arguments for taking out our support at 32.14, 32.19. It looks to me like the better course of action would be to identify pullback points where it may be possible to look at joining the short side of the market. So, what do we have then, guys? From the daily picture, we have some bearish candles. We have a topping off in the MACD. We have a bearish stochastic. So from the daily picture, our bias will be for the short side of the euro. The problem with jumping in now is proximity. You are too close to supports. You're too close to the day's lows for it to be a good idea from a risk-reward perspective to take action. So either we actually have the next down leg starting, meaning you see a break of those lows already, or better yet, can we get a pullback? Can we get a bounce? Can we get better pricing from which we can consider taking the short side of the market? Well, let's see. This is our sell-off for the last 24 hours in euro. If you look at our charts, what are we getting in the lower time frames? We are below our 14.6 level. Your last hourly candle was a high wave spinning top. We have the 200 SMA providing us a support. If you look at our charts, it seems to me that on an intraday basis, a decent resistance could be established around the 38.2 fib retracement. Oops. A decent resistance could be established here. This is 38.2 fib, 32.95, and at the same time, there is also a congestion support. So what I'd like to see is maybe get prices around that area, and from that 32.95 price point, try to find an argument for joining the sell side of the euro. Let me just see what we have in terms of indicator signals intraday. So dailies, we have a bearish bias. From the 4-hour level, what are we getting? We are oversold in our stochastic. We are bearish in our MACD. So essentially, again, the bearish bias is there for us. All right. What else do we see? From the hourly picture, you have a bearish MACD. It seems to me that we've been going in and out of the oversold territory for stochastics. Normally, that's a sign that you're working with a bearish market. So, what can I say, folks? Signal-wise, the higher time frames are telling us focus on a bear market. Focus on taking out your support at the 32.14 area. I would rather join the short side only after a pullback. Why only after a pullback? Because basically we are already around the average daily ranges. We are already, we've already seen our supports. It's never a good idea to short when you're at the support level. You only short if there's a break of support. Preferably you short when you're coming from some form of resistance. So for us, we are looking at generating entries from 32.95 at least. Okay? Perhaps an even better price point to look for shorts would be your 50 fib retracement, your 32.21 price point. Can we even possibly get there? Again, if you look at your lower time frames, what are we getting? From the 15-minute picture, a confluence of buys are developing. You have a high wave spinning top in the previous candle. Mapos, yeah, I know that high wave spinning top is not encouraging, but I'm thinking let's use that high wave spinning top for our pullback. I'm not going to short now, but by the time we see prices near some pretty good resistances, 3295, 3324, we should be able to generate another bearish entry setup. We should be able to generate shorts out of the 15 and 5-minute indicators. So by the way, did you chase the earlier breakout? Stan was kind enough to notify me about the Portuguese issue. I'm still pissed with my accidentally closing out the earlier 3272 that we had. So guys, at this point, you are at the lows, you're near your supports, and as Mapos has indicated, we have this high wave spinning top. So the immediate argument is for a bounce. But considering the higher time frames direction, what I would rather do is just wait until I see myself at better vantage point and look for new short signals from the lower time from the lower time frames. Okay, one method that I might want to use would be this: if we find ourselves just below the 3295 area, consider the 5-minute indicators. See if your stochastics and MACDs are dropping. If they are and you're just below 3295, look for the next bear cross from your 1-minute stochastic. And if these 5-minute charts are already dropping and your 1-minute stochastic gives you a new bear cross, then potentially you could be telling yourself, I am at the point where a rejection may happen. I may consider shorting the market from under 38.2, under 3295, 38.2 fib level, with a stop loss just above 50 fib, just above the 3321, 3324 price point. Okay? But from where we are, it's not a good idea to take action. Okay? As a rule, you do not short when you're just above a support. You have to wait for a breakout. Even if you have a breakout right now, I'm not convinced about jumping short, given that we have seen average, or we have nearly seen average daily ranges. The only reason that I can be convinced about joining any break of 3214 is if I see that European stock markets sell off some more, yet your US equity markets actually hold their ground. Okay, a real divergence between European equity. That that would be one potential situation where I would consider doing something. All right, so bearish, but not in a position to take action in the euro anymore. Now, before we take a look at something else, or before we take a look at the other pairs, let us consider something: our dollar index. What do we have for the dollar index? If you look at it from the big picture, you can say that we've been congesting from around 78.79, 79.12 towards the 80.12 price point. Okay, in that congestion, this is the third time that we're bouncing off the supports. We have a bullish cross in our daily stochastics, although the MACD has yet to really generate a bullish cross for us. In fact, the MACD doesn't even have a bottoming out yet for the dollar index. But still, facts are good support. We have a bounce. We have a bullish stochastic. Let us look at the lower time frames. Are they arguing rally further? Are they arguing look for the 80.82 price point? The stochastic and the daily level is there. When we turn to our 4-hour picture, what are we getting? From the intraday perspective, you have a confluence of bias in the 4-hour level. You're overbought in your stochastic, you have a bullish MACD. Being overbought is okay. You triggered a double bottom after all, which means that you have taken out a resistance level and you are in the process of taking out resistances. So when you find yourself in this situation, again, we tell ourselves a trend may be developing, an uptrend may be developing. Let's check the hourly levels. How bullish do we look? From the hourly charts, you have a bullish MACD. Previous candle was a spinning top. Normally, spinning tops are a signal to be cautious, but it looks to me like we are in the process of taking out the high of that spinning top. We are in the process of pushing back to overbought territory. So essentially what I'm trying to say here is that your dollar index from the lower time frames has all the signals that's necessary to think about making a run for 80.82. And as we make a run for 80.82 in the dollar index, that would be argument for further weakness in your euro, further weakness in your GU, and some gains in your USD JPY. How about Aussie Yen? Alrighty. I haven't taken a look at Aussie Yen in a while. I've replaced that part with the dollar index. So let's see what we have for Aussie Yen. Let me start by taking a look at the big picture. As I said, it's been a while since I took a look at this. So yesterday, a sell-off, some risk aversion, but that was really due to the sell-off in Aussie. Why is there a sell-off in Aussie? The main reason behind it has been the flooding in Queensland. Okay, a lot of damage there. A lot of damage to infrastructure, and also those flooding is causing delays and has caused some of the miners to declare force majeure. So they're going to default on their contracts. You'd like to go long. Alrighty. Well, we currently find ourselves at 38.2 fib of our rally, the 82.17 area. We had a false breakout before. From the looks of it, an even stronger support may be established at your 81.71 price point. Okay, but let's consider the arguments first. So a strong support is available at 81.71. We have, or we find ourselves at a support at 82.17. Indicator-wise, what are we getting? From the big picture, I have my MACDs dropping. I have a bear cross in the stochastic, but I see that as far as my EMAs are concerned, this is still a bullish market. Okay, I may be below my 21 EMA. I may be below my 34 EMA, and I may be testing the 55 EMA, but 78. Okay, looks like you're really. Are you thinking? Are you talking big figure there, or are you talking spreads? The only way we could get to 78 is if the Queensland situation actually worsens. I just don't see how we can get there right now. That's all the way down here. It took us 2 months to get to our current price points. Oh, you're trading for the swap points. Well, yeah. If you're trading for the swap points, then that would be the best place to look for an entry. 81, I don't know. Okay, the way I look at this is you may have sell signals, but until I start seeing dead crosses from my EMAs, this could just be a false breakout. Okay, any breakout that we see here will be false until dead crosses actually start appearing. So sell signals may be there, but the downside's limited for me. As I said, I tend to think you've got a good support ahead of you immediately at 8171. If there's a break of 8171, chart-wise, we could say that the next good support is around your 81 area, 8094. But let me see the 4-hour picture. Yeah, I'm assuming that you're more of a long-term trader then. I used to look for those kinds of trades only. Jump in, sleep, and then wake up 2 months from now, get out of the market. Well, let's see. 4-hour picture, we have bear signals. The previous candle was a high wave spinning top, so there's that question again over how strong a bear market can we generate. From the hourly levels, we've got a mixed market. Okay. I'm going to need a big reason for pushing below that 8171 area. And let me take a peek at what's going on in other markets. A big reason could be a sell-off in the stock market. If there's a sell-off in the stock market, then your Japanese yen would normally strengthen. Let's see. Well, equities are down. An even better reason would be if the commodities are also dropping. And right now we have our commodities mostly weaker, but there's no big sell-off from our commodities. So the signals are there, but for the moment I just can't see myself, or I think I just can't see how prices would be able to push past 8170 and really sell off to 8094. Not with the slow pace of losses from the commodity markets. And not with a bullish setup from our hourly indicators. So, well, let's put it this way. It is possible that you can have a bear market. It is possible that you can get to the 8171 price point. But for the moment, I'm going to limit my downside expectations to 8171. If I start to see dead crosses coming out of the daily EMAs, then at that point we may get your 78. As far as the 8094 area, we need to see some more sell-off from the commodities to get that. Okay, the signals are there from the higher time frames, but it doesn't look like it's going to happen anytime soon. Okay, there's no sense of immediacy as far as the lower time frame indicators are concerned. I think someone's decided that we have an 38.2 fib. Let's try to bounce off it. You have those long wicks from the candles to suggest that. TV, all right. Cable Swiss is not exactly something that I look at regularly. But let's see what's going on. So we currently have a bounce in Euro Pound, which means that any upside for GU would be limited. If we look at our daily indicators, we have a confluence of buys from the MACD, from the stochastic. So we have a downtrend. We broke past an accelerated bear trend line, and we have this rally as a consequence of it. At the moment, you are hitting your 21 EMA in the daily levels. I have a high respect for that 21 exponential moving average. So it might be difficult to generate a close above 48.43. If we fail to see a close above 48.43, we are likely to get a rejection. So we are looking bullish on the daily picture, but we are also hitting resistances already. Not to mention, we seem to have previous highs around this area. So you seem to be well resisted. 48.43 and then 48.77. What do we have when we move intraday? From the 4-hour picture, we remain bullish. MACD is pushing up. Your stochastic overbought, although you're below resistances. Hourly level. From the hourly charts, you have mixed signals. Your candles gave you a dark cloud cover, but you've been unable to see a follow through with that dark cloud cover. So what am I thinking? It may be possible to look for some form of rejection. Let's just remember that the 21-day EMA is also around this area, 4844. So let me put another resistance line around that 4844 region. Alrighty, here's what I'm going to do. If I were looking at this chart, I would start thinking, maybe we have a double top in our hourly picture. Signal wise, while we are bullish, we are well resisted. So it would take a close above 48.77 before we can think about a further rally. Although if you're given a close above 48.77, your next target is this true? Your next target is actually 1.5. Okay, I don't normally trade Cable Swiss. So let me check what's the spread of this. Let me check my platform. Six pip spread. Not exactly cheap, but the range looks interesting. So bullish dailies, bullish 4-hour picture, but well resisted at 48.77. I would want to see a close above 48.77 before thinking next up leg. From the hourly levels, for the moment we have a mixed set of signals. We have lost bullish momentum, but attempts to generate a bear market so far has failed. So it looks like I can view this from this perspective. Give me a close above 48.77 and I would expect to continue to rally. I would expect trying to make a run for 1.5. Give me a close under 47.81 and we would be looking for a steep fib retracement. We would be looking for at least your 46.51 price point, 50 fib retracement area. Strongest support that I can find would be around your 45.51 price point. Yeah, I know, TV. You had a nice big rally. Let me just see what the average daily range for cable Swiss. Alright, average daily range is 235 pips. That's very tempting. 235 pip average daily range. Yesterday's range is actually 383 pips. And for the month, the average is 177. I guess if you're willing to take that, well, in the scheme of things, if you get those average ranges, having a wider spread doesn't really matter. What's another 4 pip, 5 pip overhead cost? But you better be right about your market direction. So we are bullish for cable Swiss if there's a break of 48.77, push below 4781, and we trigger a double top. I'm not really confident about that double top since you have another support at 4746. So maybe if you really want to take the sell side, you better wait for a break of 4746. How about getting a rejection from 4877? For now, let me see what's happening. Your 15-minute picture is so flat in the MACDs that that's going to be a very iffy situation. Five-minute level also very mixed. That I dare not think about shorting from below 48, from just below 48.77. Not unless I'm given clear sell signals from the 5-minute charts. If the 15 minutes also has sell signals, then even better. So, wow. You know, I better take a look at those pairs, given the ranges that they do. Alright guys, let's take a look at dollar yen now. I know a lot of people are frustrated with dollar yen. That dollar yen really gives us very tight ranges. But what are we seeing? If we look at the big picture, we are trying to generate a turnaround. We almost have tweezers from the candles. You have a clearly bottoming out in the MACD. Your stochastics are pushing higher. Although your EMAs are still dropping. So these are still bearish. What's more interesting for me is this. You had a double top before, and the breakout point from that double top was 82.53. And 82.53 represents a very strong support before, and now we're thinking of it as a good resistance level. So if we manage to push to 8253, we'll be thinking about playing previous ranges, trying to make a run for 8450 at the very least, try to make a run for 8430. But is that possible? We have bullish bias from the daily picture. How are the lower time frames doing? In 4-hour charts, I have a confluence of buys from my indicators. It looks like my stochastic is poised at pushing back to overbought territory. What I really need now is a break of 82.53. Hourly level. From the hourly picture, we have a bullish MACD, we have a bullish stochastic. So from the hourly level, we're thinking, can we push higher? Can we get to the 84.44 price point? Let me just take a quick look at 15 and 5. 15-minute chart's bullish. The 5-minute level is also bullish. So I'm not exactly suggesting that someone try to do something with dollar yen. Joining this now gives you a bad risk reward. You're talking about potentially getting 31 pips. The stop losses around the same area, around 31 pips. So not a good risk reward. But look at the possibility of closing the day above 8253. If you have a daily close above 8253, then that gives you the opening to expect a rally. That gives you the opening to expect that you've re-entered the previous trading ranges. Your focus would be on trying to get to the 8450, 8430 price point. Okay, so no immediate action, but something to watch out for, that 8253 region in dollar yen. Alright guys, anything else that we should be taking a look at? Oh, we took a look at AUD JPY. Let's take a look at the Aussie. Now let me show you something first. Okay, looks like I can't go all the way back. Alrighty, so I guess I can't show you that chart. I was hoping to show you a chart of 9/11. Why a chart of 9/11? Because basically, we have this disaster in Australia. You're going to have insurance companies, well, we have the Aussie selling off because of this flooding in Australia. Now here's the idea. Once that flooding in Australia is over, once businesses and people start filing insurance claims, we start looking for news about insurance companies liquidating some of their positions, some of their assets overseas. Let's face it, whoever has insured those businesses in Queensland, the people in Queensland probably invested overseas. And as those guys start pulling back, start liquidating those overseas profits to those overseas positions to repay or to pay up the insurance redemptions, then we're going to look for a bounce in our Aussie. By the way, as far as Aussie AUD USD is concerned, we actually find ourselves at a very strong support area. the 99.92 price point. If we look at it from the big picture, there's an attempt for a sell-off. You have a bearish stochastic, a bearish MACD. You're currently testing your 34 EMA. 34 EMA also acting as a support. So this is giving me a nice support at 99.92. Now, what I'm looking for is this. If we take too long in the attempt to break past 99.92, then we start asking, are we developing bullish reversals? Are we developing bullish divergences in the intraday indicators? For now, what are we getting? We have a spinning top for the last hourly candle. 4 hours, we've got bearish signal still. From the hourly time frame, we have our MACD with a bullish cross, although that's more flat than really rising. You have a bearish stochastic. So, mixed signals in the hourlies. What I would like to see is gradually start developing bullish divergences. Maybe from the 15-minute stochastic. For now, we're mixed in the 15-minute charts. We are mixed in the 5s. But if we continue to hold above 99.92, we should focus on gradually developing buy signals. And we should start looking for those buy signals to translate into the hourly indicators also rising. And once we have that, we have an argument to actually call for a bounce from that 99.92 price point. So for now, we don't want to take action. But the longer it takes to see a break of that 99.92 strong support, the more that we will be risking a bounce happening later. Okay? So, it's a question of time, really. If there's no breakout now, if there's no breakout around the open of the New York market, then we would look for a bounce. And speaking of the devil, looks like we have a breakout. Okay, so we have a breakout, which means that what should we be looking for? 99.92 is a strong support level. Your next support is 99.50. Let me just check average ranges. Average range for Aussie is merely 94 pips, although yesterday we had 100. What are we talking about here, guys? We're thinking in terms of, can we get a close below 99.92? Can we confirm this bear market? And if we do that, I don't care if we have exceeded average daily ranges. An hourly close under 99.92 would have me thinking about a further sell-off. Would have me thinking push below 99.50 and maybe sell off all the way down to 78.6 pip, your 99.21 price point. So guys, keep a close eye on how this hour closes. We close under 99.92 and we will expect a sell-off towards the 99.21 price point. Questions, folks? By the way, I keep inviting people. I've actually opened my Forex Academy trading room. So if you guys want to join me during normal trading hours, feel free to just up. The service is free. I'm trying to see how long I can keep it free.